Hi there, it's John McLaughlin here. So just a quick introduction to today's trading session. So we're going to be trading gold today on a strategy called Crossfire. It's really simple and easy to do. So if you like this video, if you're going to get some benefit from it, then please comment, like and share and subscribe to the channel so you don't miss any of the updates. All right, here we go. Okay, good afternoon everybody, it's John McLaughlin here again, and we're going to do another session on gold. We're going to do the Crossfire Strategy. Yesterday I did the whole 2 hours, and what I tried to do was fast forward with a little bit of entertainment on the fast forward. I don't really think it worked because the video was still like an hour long, so I only cut it down by sort of 50%. So what I'm going to do today is just go through the setup, go through things again, just so you get familiar with what we're doing, and go from there. So as you can see, it's, what is it currently now? It's 12:58 GMT. I've got both golds on TradingView. So this one here, I've got gold on the 15-minute, and I've got gold here on the 5-minute. And what I've done today, I've just changed this box. As you can see, the outline is a little bit less. I changed the opacity a little bit so I can see. So if I just move this, look, if I just move the box, it says. So before it was difficult to see the wicks, so that's going to make things a little bit easier. So just little things like that make a difference. So this box is between the 1300 and 1500. Which is the US open time is 1300, so I was waiting for that candle to go. So what we'll do in the meantime, we'll go and check the news. So my FX book. Let's go and see what is happening with USD. So there's a lot of news in here. One is medium, that's coming up in an hour and 59 minutes, so that's gonna, most of the news is going to kick in after the session, after our 2 hour session is finished, so it shouldn't really have an impact. However, yesterday the news never really made much of an impact, and it was high intensity news as well, so so yeah, 2 hours, 2.5 hours. Although, you know, it's always good to be mindful of the fact that there is a lot of news building up. So is that going to affect the markets? You know, is manipulation going to happen before or afterwards? Is there going to be a lot of consolidation before, you know, this sort of 1 hour 59 minutes? So 1500 is the close of our session. So we'll just see. But again, we know what's going on. We know what's going on with the news, and we can be mindful of that as well. So let's just go back to our charts. So just one thing to note as well. So this is the 1300 candle, and once that's painted, finished painting on the 1315, then we can put our trend lines on, and we'll put those on. We'll put them on properly this time. I've got the still got the dodgy glasses, but yeah, yesterday I shouldn't have guessed myself. But then I should have these a bit bigger so I can see. So we put the indicators on, and we put the, excuse me a minute, let me just sort that. So we put the trend lines on, we put the box on the 15-minute time frame, and then we work on the 5-minute time frame because it gives us a more accurate, or it seems to be giving us a more accurate reading in terms of our backtesting. One other thing to note with the backtesting is we're backtesting all these indices with this particular strategy, and that is the power of the community, in that if you can get a large quantity of people who know what they're doing to backtest indices, and I'm currently backtesting German 30, the German stock market, using this strategy with different times, with different, you know, different market opens. With German 30, the market opens at 8 a.m. UK time. Obviously, Germany is an hour in front, and we're just backtesting that. And at the moment, you know, it seems quite positive. And again, we're going to reserve judgment until we've done a bit more backtesting. But just imagine you're in a position where you look at gold and you think, okay, nothing really happening on gold, but I also like to do silver, or I also like German 30, or S&P markets, whatever, using this same strategy, and you've got a whole abundance really of opportunities to use this strategy. So that's all coming up, and that, as I say, is the power of the community, and we can get more feedback from different people who are actively testing this strategy. So just wait on this candle to finish painting. One interesting thing mentioned yesterday, we talked about the stochastic indicator, the lagging indicator. At the moment, as we can see, we've got, let me get this out of the way, I'll just illustrate it for you graphically. We've got sellers on top, we've got buyers, so sellers are in control. The stochastic is in the extreme. So potentially we're looking at the market coming down based on this indicator. But again, it could do anything. It could snake along the top for some time. We'll just have to see. And again, the indicators, the stochastic, the candle formations, the trend lines, all the indicators that you can use, they're all just probability stacks, as we like to say. We're stacking the odds of the possibility of the price going one way or in the other in our favour, and we're just stacking these things up. So no one indicator can tell us definitively what's going to happen, but it's lots of different things that build up to paint the picture. Okay, but like a paint by numbers, you kind of paint the reds and you paint the blues, and by the time you've nearly finished, you can, that's what I'm doing. Then you can see what you're actually drawing or painting. Excuse me. So on the, okay, we're 13:04. Yeah, we've got another 10 minutes yet. 10 minutes yet before this candle paints, and then we can put the trend lines on. So one of the questions from yesterday was, do you have to sit in front of the computer for the whole 2 hours? If you're at work or whatever you're doing, you've only got, you've only got limited amounts of time. What can you do? And this is one of the great things about the software that we use called the Ninjacator. If you see here, we've got a Ninja up. We've got a Ninja up here. And what we would do, we would set the trend lines, like I'm going to show you in a minute. We would then go to the Ninjacator, okay, right click on it and just add alert. Okay, so all we need to do is add an alert. So the conditions are on the Ninjacator version 3. It's the brand new software that launched last Monday. We can either set a Ninja up or a Ninja down, so a combined Ninja up and Ninja down alert, and whether it goes up or down, it will ring. We can get a notification via email or on your phone or a text message, and then we just add once per bar. So every time the bar meets the conditions, the alarm will go off. Okay, while it's painting, so it can always move. Now if we do once per bar close, once that candle has finished painting and we get the condition, then the alarm will go off. And quite literally, this is what people do, that the alarm goes off, we know conditions have been met, we can check our mobile phone, whatever we're doing, and then we can get in or not get in the trade based on the conditions of the market at the time. So you don't have to sit in front of the computer, you don't have to be glued to the whole 2 hour session. I just did it yesterday just for illustration purposes, just to really give you some more teaching and kind of give you my thoughts about how we do things. And that's what you can do, and just click on create. I'm not going to do it now because I'm sat here looking at it, so it'll just annoy me. Little alarms going off. But that's what you can do for any strategy that you do. You can set an alert. Let's say, for instance, we had the trend line and we're waiting for price to go above the trend line, then we can just right click that, we can add an alert, and then we can put our conditions in there. And when those conditions are met based on that trend line, whether it's up or whether it's down, then we get a notification on the phones, and we can get in the trade based on that. And this is what makes trading easier, is people think you're glued to, just checking the time, 13:09. People think you're glued to the screen. I don't really fancy trading because I don't want to be sat in front of 10 screens. And unless you're a professional industrial or a institutional trader, you're not going to be doing that. As retail traders, this is how we do it, and you can make it as complicated or as simple as you want it to be. And let me tell you, it needs to be kept simple. Keep it simple. Make your pips. Have your targets. Have your strategy. Stick to it, and just make the money. And that's it. It's as simple as that. And it should be as simple as that. Okay, 13:10. 5 minutes to go. We'll come back in a minute. Okay, we've got 1 minute to go. So what I'm going to do is show you where we would place the trend lines. So as you can see, this is the candle we're going to put the trend line on. But we also want to look for the higher high, the highest candle next to this one. And as you can see, there's not a lot. Okay, we can go to the left and we can see that there's a higher high here, but pretty much it's almost in line with that one. So what I'm going to do this time with this one is I'm going to put the magnet tool on, and then I'm going to go and put the candle on top of that, and this trend line is going to be horizontal, or as near as, that's about it. All right, so we're going to go to the next low, so the lower low from here. Let me put this off a little bit, you can see it. The next low is this one here, so we're going to, again, magnet tools on. It's going to stick to there, and this candle, let's take the magnet tool off. We've got a wick down to there, so we're going to put this candle to the bottom of the wick, about there. So there we go. So that's the trend line set, and we set it on the 15-minute, and then we take our trades and our ideas from the 5-minute. And remember what I said about the stochastic being in the extreme, and it's been overbought, and the potential it's going to go down to the downside, but now you can see it's tailing off. So are we going to go in for the sell? Is there going to be a sell opportunity? Let's see. At the moment it's hitting the line. Remember yesterday when the wicks just kept touching the line, respecting that support and resistance zone. This is just touching the line now, so we'll see what happens. And again, one thing about trading, have your strategy, be patient, sit and wait. Okay, sit and wait. Or sit and wait for the alerts to go off. That's the other thing. If you're busy and you're doing things, you set things up like this, you've put your alerts on, you're waiting for the alert to come through on your phone, you can check it and then take the trade as you wish. Tell you what I will do, I will put an alert on because it will give you an idea of what happens when an alert comes through. So I've just right clicked the Ninjacator. I'm going to add alert on Ninjacator version 3. I'm going to go for a down alert because we're currently, I'll tell you what, let's do a combined one because that's what I said. We'll do once per bar, so potentially we could get an alert go off and it could cancel out, so we could come back to it and it could be cancelled out. We'll create that. As it says, it may trigger differently from what you expect because we've done it once per bar, so as the candle is painting, that alert may alert and then it may disappear. And again, much like yesterday, as you can see, the price has started to respect this trend line, which did yesterday. And when price respects certain lines, we know it's going to do two things. It's either going to bounce or break. And also when price starts to respect those trend lines, it means your trend lines are in a good position. You've put your trend lines in the right position. So sometimes if we're drawing other lines on the chart, using different strategies, whether it's using pitchforks or just general support and resistance or supply and demand zones, when price starts to respect those lines, it gives you more confidence that your strategy is slightly more watertight, more confidence in price action. And again, when you get a price like this where the candle kind of goes up and down and you get a very thin body and a long wick, it generally means it's indecisive. So the market doesn't really know what it wants to do. Okay, so we've shot down just past that line. So bounce or break, well, it's just broken the line. So now what we're going to be doing is looking for those conditions to be met by the ninjacator, the ninja down alert. And if we get that, possibly within the next candle, because it's still got to break this PSAR, it's still got to come down and touch this PSAR move from yesterday. When it touches that PSAR, the parabolic stop and reverse, that will then go above, and then we'll more than likely meet the conditions to set that ninjacator off, that ninja down alert off. So again, if you're in this position, get your MT4 open, get the charts open on your MT4 on the right time frame, and just get ready to take some action. When that PSAR does flip, then that's always a good idea for your stop loss, or should we say account protection. So you set your stop loss at that point, and just again see where the market is. We can see that on here we've got the higher high, or the higher high for this particular time frame, and again that could possibly be a good target for your stop loss. So if you measure that from there, let's take it to the line. Again, you've got about 12 pips of stop loss from that. Okay. And again, this is a big thing of contention where people look at the risk to reward ratio. So, you know, your stop loss can be 10 pips and your take profit can be 20 or 30 pips. And that would be like a 1-to-2 or 1-to-3 ratio. And people always say, you know, the bigger the ratio, the better, because you're risking less to get more gain, to get more reward. And then you look at a strategy like this, where you sometimes got a 1-to-1 risk to reward, and yet we've won all the trades that we've taken with this strategy. So you've got to kind of weigh it up. And certainly within the back testing, we've looked at, you know, the risk to reward strategy, the risk to reward ratio, and you know, we've always found that once this PSAR flips just slightly above that PSAR, that stop and reverse point, is always a good place. He's just teasing us. That's what he's doing. Just okay. Now it's gone. Okay, so the PSAR has flipped. We've now got the ninja down alert, and we've got 56. All right, I'm going to get in. If it'll let me. Right, let's look at that. We're in the trade for the sell. So conditions were met. We're below the line. We're well below the line now. We're currently 4 pips up, 5 pips up. Got 6 seconds left on this candle before it paints. So that's the candle done. And we'll move on to the next one now. So if we look at just go and zoom in a bit more. So if you look at this area here, just there, that's where the PSAR is. Okay, so that, and again, it is above. Remember I said about these higher highs here. These higher highs, it's just above there. So to have the risk management and let the trade breathe, is put your stop loss would be up there, and your take profit is 10 pips. And again, we'll just wait for this to play out and see what happens. Let's say it's still hovering between 3 and 5 pips at the moment. You can see from the stochastic I spoke about earlier, it was in the extreme. The buyers were in control, then flipped, and then it's coming down, and the red is on top, which means sellers are in control, and clearly, as you can see, that's the case. You know, this strategy is great for people who are like me, who like to get in and get out of trade. Like to get in a trade, like to get out a trade, and we're out. We've done it once again, and 17 pips on this one. So let me just put a little arrow here. So that's, in fact, let me just get a different arrow on it. So this is where we got out the trade just here. And I always say the sweet spot for this strategy, because it is on the 5-minute time frame, is 10 pips. You can sometimes get more than 10 pips, so between 10 and I've found 14 pips is always quite good. We got out with 17 pips, but you know, go for your target of 10 pips. It's safer, you know, you're minimizing your risks, you're mitigating your risk factors, if you like, and you're protecting your account. Remember that the essence of being a good trader, it's not about how much money you make, how many pips you win. It's about how well you protect your account. And if you go with that mindset moving forward, you'll be a much more successful trader. So 13.28. So, you know, between 13.15, 13.28, we've been in the trade. We're now out of the trade. We've taken some good profits, and you know, we've taken 17 pips. So for today, we've done, you know, almost 2 days worth of profits of pip targets. Again, in what, 20 minutes, 25 minutes. So yeah, we can hang on. I'll hang on a bit longer just to see how things play out, because it's always interesting, even if we're not going to take a trade. It's always interesting to see what happens, and again, there's always something to be learned on sessions like this. So again, if we'd have got in this trade and we were looking to take 25, 30 pips, then we would now be in drawdown. Drawdown is, well, we would have been minus pips. So we would have been up 10 pips, up 15 pips, and then, okay, we'll strain the trade a bit longer, we might get some more. Actually, no, it's reversed. And now you've lost that potential to cash out, because the market is now reversing. So what's going to happen on the 5-minute time frame? We can see the stochastic. We can see how it's arced over from the top when buyers were in control, to sellers being in control, to us taking profits, and now it's entering back into this extreme. So potentially it may enter this extreme where it's been oversold, and then start to curl back for the buy. But again, we'll see. Okay, I'm going to keep this video short. I'm probably going to cut it off now, because yesterday's was an hour, and I just want to keep things nice and short, nice and sweet, so you can get some information and take something away from this. So I'll come back just before the end of the session, just to give you a review of what's happened. Again, take a screenshot of this, and you can use this on your own trading view. Obviously, to get the Ninjacator, you need to be part of the community, but you can still put the trend lines on, and you can still see the way it works. Again, real simple, really powerful. Okay, so I'll come back before the end of the session, and we'll talk just then. All right, speak soon. Bye for now. Okay, so it's 13.44. I just wanted to bring you this. Remember before I was saying that the sellers were in control. We're almost into the extreme. The potential we might end up going backwards, and price has done that. It's come down. We've gone down to our take profit level, and it then went back up for the buy, and it's been hovering back around this red trend line, this support and resistance zone, as it's become. We've got the ninja up, so we've got the ninja up alert, but we also want the price to go above the green trend line for the buy. So again, it's just something that I thought I'd bring you in terms of the trend of the price movement, or the price action as we call it. It went down, it went up, but all the time kind of respecting this trend line. So will it break or will it bounce? Well, we don't know. It could do anything. At the moment, it's trying to get over this line, but it could bounce back. So as I said from yesterday, let me get my my brush tool out if I can find it. Right, here's the brush. Just seems to be wiggle there. Okay, so it could go up to there and then bounce back and go back down for the sell, or it could bounce up, come back down, and then go up for the buy. Okay, I don't know why that's so wiggly. It's not my shaky hands. Anyway, so that's what the price could potentially do at any line or any point. So at this line or at this line, or what have we got down here? We've got any line. Let me just say, the price can bounce or break, and really, no one really knows what it's going to do until you start looking at the price. The other thing that's quite noteworthy is the distance between the PSAR and this candle here, and it does tell you that there is some volume, quite a bit of volume in the market in terms of the buyers, and you can see the stochastic, the gap between these two. Remember, buyers is the blue. If whichever line is on top is in control, so currently buyers are in control, and there's quite a big gap, and there's quite a big gap between the PSAR and the bottom of this candle, and it's currently broken the red trend line. So in terms of bounce or break, at the moment it's looking like it might break, and there's a minute and 10 to go on the 5-minute time frame, and if it goes above the green and we get the ninja up, we've already got the ninja up, so that condition's been met. So once it goes above the green, then again, potentially, depending on which way price action is going to go, we'll get in for the buy. So 30 seconds left, and you can see why you wait, because now it's gone below the line, and if you'd have got in that trade just as it went over, then we'd have been into drawdown now. So we're talking about support and resistance. This red line offered a resistance zone around here. Okay, so it was bouncing off, and then it bounced and it broke. As soon as it breaks and it forms a new candle, then this line then becomes support. So support above or resistance below, depending on which way the trade's going. And that's quite important. That's quite important to see. And also this line now is proving a resistance. So we look at support and resistance. It's like floors and ceilings, and there's got to be a certain amount of price action and volume to push it through to break out of this potential of this line here. And again, it might skip around for some time, and like it did yesterday where the wicks touched. But again, we've got a lot of distance between the PSAR. We're starting to come into the extreme, and as you can see from here, obviously this is a lagging indicator, so it's not a crystal ball predictor. As I said, it's a lagging indicator, but the price is starting to tail off. So it may well go back down. It may skip sideways for a bit. We'll have to be patient and see what it does. And one of the things I said about putting all these different indicators and all the different information that we've got coming through on the charts, put it together and give yourself that balance of probabilities. And markets are not certain. They're not black and white. They all react on probabilities and also manipulation by the banks. And so even if this PSAR, and I said there's distance, a lot of distance between there and there. Okay, so we go, yay, we're going in for a buy. Okay, but then we go, yeah, but look, we've now come into the extreme, and buyers were in control, but it's tailing off. So there's a little bit of doubt there. And then we look at this trend line, and we say there's a lot of volume, but it bounced off, and now it's still skipping away. So what is really happening? So we have these probabilities, which kind of, our emotions can be up and down, and then we have positive things that happen, and then we have doubts. And it's only when you do back testing on a strategy like this, and you do hundreds and hundreds of trades, and you can do trades on a demo account, and you get to understand the commonality, the relationship of the pair between gold and USD, and you get to understand how it works, and it builds your confidence, and you see similar patterns emerging, and you say, yeah, we've got this, but we've got this. We've got this, but then we've got this. And you put all these different things together. And literally, that is the way you become a good trader. The way you become a good trader is repetition. You know, it's like doing martial arts, like doing karate. You know, you don't learn martial arts over the internet. Okay, you've got to get your gi on, you've got to put your belt on, you've got to go out, you've got to go through the pain of stretching your legs and doing bunny hops around the dojo and all that sort of good stuff. And only with time and repetition do you get better. And I know it's just old information that, you know, people already know. But there are so many people who want to get involved in trading and think, okay, I'll do 1 or 2 live sessions and then I'll be okay. And then, you know, 2 months later they're going, well, I couldn't get it to work. Well, that's because you didn't learn. It's just constant learning, repetition, making mistakes. And the best way to learn is to change your mindset from thinking you're going to go out and make money in the first week to learning. Let's go out, let's backtest. Let's see what's happening. So this price went up and it went down. Why did it go down? Why did it go up? What's really happening? What's happening in the markets? You know, why is there a big gap here? Why is this happening? And that's when I first started trading. That's the position I wanted to be in. And I wanted to be in a position where I could walk in to a chart, have a look at the chart and go, oh yeah, this is happening today. And this is potentially what could happen. So we put our indicators on with an intention of what could happen. And then we take the trade accordingly, but based on price action. And it's not difficult, but you need to do that repetition. You need that confidence. So in terms of zones with this 2-line strategy, where we are now in this zone here, okay, this peak of the triangle going out to here, it's not a good place to be in. Okay, what you want is this price to come out into this nice free area space, okay, or down into this free area space. But when you're in between zones, between here or between here, it's always a little bit dodgy. Okay, that's the technical term is dodgy. All right, because everyone understands what dodgy is. So this is offering support to stay in the zone, and the green line is offering resistance to stay in the zone. So we're kind of between the two. We're not going to go anywhere. Okay. And you know, if some people would see this and say, oh, this is a decreasing wedge. So when it gets further along this wedge, it's going to be forced to do something. It's going to go forced one way or the other. And you know, this crossover happens at 14:30, and it'll be just interesting to see how this plays out. So as you can see from here, this green candle here, okay, bit of a doji candle, okay, but it's respected both trend lines. The next candle along has just broken out, but what we really wanted was some air, so a gap in between the green and the body, and as you can see, it's wicked, so the wick is touching. So that, to me, it doesn't give me a clear indication that this is going to go for the buy. If there was a nice big gap in between, then it would give me more confidence to take the buy. But at the moment, it just seems to be consolidating a little bit. And I said, as it gets towards this wedge, it's not really a falling wedge. Well, it is a falling wedge. Then it would make price to be forced in one direction or the other. And again, it kind of wants to go, but it's not really happy doing it, if you see what I mean. So we've got 3 minutes and 33 on this 5 minute time frame left, and we're just going to see how things play out, because I think at some point it may well go up a bit further, and there may well be buying opportunities, maybe in 5-10 minutes time. But as you can see, the stochastic It's gone up. It's now in the extreme, and you can see that that little blue tail is just flicking up. So it's telling us that there is a battle going on between buyers and sellers, and at the moment buyers are just winning out a little bit, but it's not convincing, and that's the difference. It's not really a convincing move to the upside. The way it's moving now, it looks a bit more positive. So again, potentially we might want to think about getting the trade, but for me personally, the way it's going up and down, I would be happier waiting for a bit more positive price action. See how like that just happened there, nice big spike, but again it's coming down, so there's no rush. There really is no rush, because imagine if you'd have got in, you know, about there, this area where it spiked up, and you go, oh yeah, great, let's get in. Oh no, it's down again, you know, and you know it's going even further down again because there's no positive price action to the upside. Okay, so it is 14:55, 5 minutes before the end of the session, and there's been some interesting price action going on. And what I'm going to do at the end of this session is explain to you about consolidation and how it works. Remember at the beginning of this session I said there was some news coming up here. There was some news coming at 1400, so 1500 US news. And even though it was low category news, it's news nonetheless. And usually what happens with the institutions is that they manipulate the markets, but they do it covertly behind news. So they can say, you know, it wasn't us that manipulated the markets, clearly it was the news. And what's happened here is we've had, since we took profits down here, waited for the price to come up, the price action was a little bit choppy, very wicky, very indecisive, and not really something that you want to get involved in. But here the price wicked up, and it wicked up real quick, and then it came back down again. And then as you can see, price has gone down quite a strong move below these trend lines, these support and resistance lines, and it's gone back up. I'm kind of guessing that when it gets to 1500, price might do something to, I would imagine, the upside. Because let me show you what's been going on. So let me get a box on here. So we have a box on here to about there. So you can see all this is consolidation. So price does two things. Either goes down to the downside, to the south, it goes up to the north, or it goes sideways to the east. Okay, and when it goes sideways to the east, this can be an indication of an accumulation by the banks, and this is because the banks need to take people out their stop losses in order for them to profit. Now, for people like us, you know, we haven't got billions and billions to invest on the market, so you know, our however much we've got in our account doesn't really make an impact on the markets. And bearing in mind, if you look at, let's say this move here, from the top of that to the body is 30 pips. Now it takes an average of 30 million US to move it 1 pip. So you can imagine the amounts of money in there. So what happens is, in this accumulation phase, you've got, let me see if I can find my, is it there? Yeah. So you've got people's stop losses in there, because people think, okay, it's going to go down, so my stop loss is up here. And by contrast, you've also got people with stop losses down here. So people who think the market's going to go up have the stop loss there. And the banks can come in during this accumulation phase when nothing's really happening and go, boop, just up there. Just take out those people's stop losses. Thank you very much. That money is all now mine, thanks to the banks. And then they'll continue going up, We don't need to go, and then we'll go down. Oh, we've just peaked out there. Thank you very much. All you people that were going for the buy, we've now taken out your stop losses as well, and then takes everybody else out the market. The banks and the financial institutions are now in the market for themselves. We've got news coming up at 1500, and then they need to make a move to whichever side. They'll probably make a move to the upside to cash in, you know, to take their orders. So we'll see what they're going to do. So we're going to stay on for another. Right, we've got another minute before the end of the session, and let's see what's going to happen. Okay, so I just thought I'd bring you this just to finish off today's session. So we're now at 16:25, and remember that I said about the consolidation, the manipulation, and the possible upside turn to the upside by the banks and the financial institutions. And if you look at this box here, this was the consolidation box that I spoke about taking out people's stop losses for the banks to gain liquidity to go and put their own orders on for their own customers and clients. And that's what's kind of happened, is kept pushing up to the upside, and they won't overtly go and manipulate the markets, the banks. They won't suddenly push up. Sometimes there is a big push up, but generally what's happened is that they've taken people out of their stop losses to the north and also to the south, and continued pushing upwards from there. So, you know, for retail traders, what this means is that if we are able to identify areas of consolidation, then we can go and trade consolidation, and that's what we do in a different strategy that we trade with gold. And we can put a box on the consolidation, put an alert on the box, and when the price goes outside the box to the upside or to the downside, and that's when we can think about getting in the trade. But for this strategy, the Crossfire strategy, again, really simple. Today we put the lines on, we got in for the sell, we considered getting in for the buy, but we thought, I mean, we could have got in there, but it was a little bit choppy, a little bit wicky, and for me, I like to play things nice and safe. Got the daily targets going for the sell, so there's no problems there. So I hope this, once again, I hope it's helped to some degree. You know, as I said before, during the middle of this this training session, the only way to learn trading is to do lots and lots of trades. Put trades on, test it, back test it, you know, go over the repetition, attend the live sessions, get involved in the community, and you know, it's all about building up your confidence and building up that psychology of what the markets do and how you can gain, you know, using the markets with the markets. So I hope that helped, and look forward to seeing you probably the same time tomorrow. No, it'll be tomorrow, it'll be the day after tomorrow, with another session. All right, speak soon.